Just want to bring your attention to the British pound versus the Canadian dollar here. As you can see, we have tested this level of support now as resistance, and if we look at this zigzag formation or thunderbolt formation, also known as an ABCD, we can see that if we get down to the daily time frame, we have a potential sell opportunity based on a classic ABCD completion, and these are one of my favorites when it comes to basically trading reversals, because a lot of people will be thinking, wow, we've got a double bottom, fantastic, the day is safe, the British pound is going bull, fantastic. Well, we'll have to see about that. However, this is a very valid ABCD extension, or reversal, shall I say. If we get our Fibonacci extension out, we can see that we've got a rejection of the 1.618, which is a sign of overextension to the upside. We've got a bearish pin bar reversal as well. And that is all we need, ladies and gentlemen. Oh, we've got bearish reversal divergence as well. How about that? We've got, on one hand, price has been making higher highs from the 13th of September all the way to the 20th. However, on the RSI setting 6, we've got a lower high, and that's a sign that the bears are creeping into the market. Furthermore, if we look at the fact that we haven't had the low of the preceding 1, 2, 3, 3, 4, 5, 6, 7, 8. 8 bars, the low has only been taken out once, the preceding 8 bars. So if it does take out the low of Friday and our order is just below the low, stop loss above the high, then that is potentially a good sign that we're seeing movement to the downside and momentum to the downside as well. Okay, so just to give you an idea as to the reward to risk, what we're simply going to be doing, as I mentioned, just simply place our entry below the low of Friday, stop loss above the high. There we go. And if, as and when we get to a one-to-one, then what we'll simply do is we will buy back half the position to obtain a free trade, and then we'll look to target the previous swing low. That's a very good reward to risk, ladies and gentlemen, 4.27 to 1. If you're risking 2%, then that's even more. Let's see if it actually respects a Fibonacci retracement level as well. Oh, the 382, fantastic. Okay, so that's a shallow retracement. So just to recap, we've got a confluence of reasons pointing to a sell with the British pound versus the Canadian dollar. We have the completion of the A, B, C, D pattern there, and that is the 1.618, which is my preferred Fibonacci-based extension, given that it is an overextension, and it's conforming to a rejection of previously held support, now as resistance. It's overlapping very nicely with the 382 Fibonacci retracement from the previous high that started the downward move, and also we do have bearish reversal divergence on the RSI setting 6. Okay, so we've got some pretty serious technical reasons behind this one. Entry just below last Friday, stop loss above the high, and we'll accept that it's a reversal in terms of the shorter term. But looking at the longer term, it really does look like a trend, trend-based play. There we go. So there you have it. That is the British pound versus the Canadian dollar.